Good morning, people. Let me know if you can hear me. That'd be great because we've had instances in the past, the recent past, where I talked for so long only to understand that no one heard anything and there was no audio and everything I said was for nothing. So let me know here before we get started if you can actually hear me. That'd be great, and then we can take a look at what it is. All right, perfect. Perfect. Thank you, my Greek friend. So good morning, happy Monday, right? Black Monday, I've titled this video, right? Maybe clickbait some people in because everyone was comparing the instance to Black Monday. Everyone was looking for this ginormous gap down where we limit down, markets go down 10% over the weekend, right? Social media was flooded with this bearish narrative. And realistically, yes, we are gapping down. There was a decent bit of sell wave. There was controlled selling on Friday's session, controlled selling. So what that means is there was a continuous move of market selling that was just, well, the buy side pretty much provided liquidity for the sell side. It wasn't necessarily bidless, right? The bid was very weak, but it was a very smooth way down where someone ended up selling like 8,000 contracts into the lows on Friday before closing the session. So with the gap up, this is what I was mentioning to our friends at TRADEPRO Academy on Discord, that we're most likely just going to fade the gap up, right? We're going to see those like mid-30s. I didn't think we'd drop all the way down to the 15s, but that was an opportunity as well, right? Traded this morning, Europe time, right? Very early for those Eastern time zone people, but a lot of people looking at this thinking this is it. This is the next crash. This is 1987 all over again, where we go limit down and things get destroyed over the next few weeks, right? And people have seen a bit of sell side. Tech, on the other hand, has not been extremely bearish. Keep that in mind, right? We're still at those August lows on tech where a lot of people are waiting for that final sweep before we do get that potential turnaround. On a seasonal basis, what we have is expected bullishness into November and December. We'll see how that pans out. But a lot of people are going panic mode while the market is just being controlled on the sell side without too much fear and panic. There's no reason right now to see that limit down. There's no catalyst for it. Next week we have Jerome Powell jumping on the mic with the Federal Reserve Fed's meeting, and this supposed week is supposed to be a blackout period in the Fed, but Powell is coming on, I believe, Wednesday after the bell to talk. Very, very small chance that he talks about monetary policy and whatnot. So looking at this market, right, a lot of people are screaming fear, 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 where this is a pullback, a correction potentially, but a pullback in the market as we come into, yes, stricter economic and monetary policy conditions. There are things that are on the fence, but realistically, those catalysts have not yet been hit. And I think it's going to surprise a lot of people by the time it takes to actually get slapped. The U.S. 10-year peaking at 5%, right? This is a potential turning point. We'll see how that shapes up. But this week, the Magnificent Seven, right? A lot of them are reporting earnings. We got Google, Amazon, Meta, and Microsoft reporting earnings. So those are 4 out of the 7. Tesla reported last week, which is down now, down pre-market as well. And then I think next week is Apple. Nvidia is in November, if I'm not mistaken, right? So I want to just open this up. You can see the US 10-year where it's at. Let's see if this loads actually. It's pulling down now a little. I was just looking at this on a larger scale. But Tesla, I think that this is the week, right, that we get the bottoming in the potential tech, in the overall market, in the tech market. This week should provide that bottoming experience before we start seeing too much of downside. If we continuously push throughout this week to the downside and there's panic selling and we break a lot of the supports that are coming up, then it's going to be pretty bad news for the market. But I suspect that we do see some bottoming in this for the next few months at least, that start this week or next with the Federal Reserve. We also have non-farms next week, but let's talk about earnings a bit here before we get a little too sidetracked. So in terms of earnings, huge earnings week, right? Magnificent Seven, like I talked about. We have, what do we have here? I don't think this is accurate. I'm looking at this right now. Yeah, okay. Apple is at the beginning of November, where these seven names, right? They pretty much carry a massive, massive portion, about a quarter of the index's market cap, with Apple, Microsoft, Google, Amazon, and Nvidia, right? They all of these will. They hold actually a quarter of the market cap. So three of these are reporting this week, and a lot of people hope that bumper results and a significant jump in year-over-year numbers will put their heavy weights to work. Realistically, these tech names are up very aggressively. If you look at the combined index for these seven in comparison to the equally weighted triple Qs or Nasdaq, they're up much more, like two and a half times, I believe, in terms of percentage gains year to date. So these names have to, I think, would do really well to actually pull down valuations to be more attractive, to get things back in line with other names, right, that have been struggling, so we can actually see that larger pull up. Now, this would cause a rug pull in the market, and I think some panic selling to get into some lower levels where people get very, very shocked. Things go super bearish, quote unquote, and that's when we actually start flipping. So we have Meta that reports this week. Apple is waiting for the beginning of November, and Nvidia is last. Trading individual earnings calls can be very difficult to predict and very volatile, right? Especially if you're doing it with options. So I'd really keep an eye out on that. But all eyes start on Tuesday, where we'll see 4 out of these 7 actually report. This is going to be a pivotal moment, and I think even if they do pop, I think they do get pulled down a little on the session itself, right? Unless all of them have amazing forward guidance, and that could be our bottom. But I do want to see that final rug pull. I think that tech isn't necessarily in its best area to turn things around, right? It's barely pulled back from these highs, and I think that we're going to see something of the sort this week and a potentially bottoming out. Now, we also have energy names at the end of the week, right? We have Chevron as well as ExxonMobil, right? But Chevron is in the news because it's looking to acquire Hess Corp in at a $53 billion all-in stock deal to expand its DJ and Permian Basin operations. So the news comes less than 2 weeks after Exxon announced its $60 billion acquisition of Pioneer Natural Resources, right? The deal pushed Chevron's stock 3% lower, while Hess rose about 2% to the upside. Separately, Roche will buy Televant Holdings and Rollvent Sciences and Pfizer from Relevant Sciences and Pfizer for about $7.1 billion up front. So Merger Monday is on its way here. In terms of other news, there's not too much. I think a lot of people are anticipating what we have in tech earnings this week. So we'll see. I think markets be a little quieter until we get those results, meaning today, right? We've already seen markets pull down pretty aggressively. We're gapping down in the equity market here. You can see on my screen with the S&P 500. So yesterday on Sunday we gapped up. We hit that 4260 region over here before pulling down about 50-ish, almost 50, like 45 handles to the downside, right, before we start to see some of this pull up. Realistically, I am under the impression that we'll see sell side open up on pullbacks. I didn't anticipate prices actually holding this low into the open, but under 42.35 is pretty dangerous for these bulls. Under 42.45 to 50, again, another area where I think the sell side can trigger. But I personally would have liked to see prices a little higher at 42.80 to open up the sell. Unfortunately, right, we're very far from that area, so some sellable rallies I'm going to be watching back into that 60 to 65 as a very important area to come out, as a lot of volume you can see over here has traded into that region, putting downside pressure and being a very important order flow area. Above that area, right, we can catch a bit into the 80s, but that's the key turning point. If we actually close or move back above the 80s on the S&P 500 futures, we're going to see that next leg to the upside. That's the way I'm looking at this. Right now, now, NASDAQ is trading at 14,600s. I had a marked area around 14,400s on NASDAQ as a downside target, as well as a 210s, right, to see that rug pull and then continuation back to the upside. So I'm still in sell the rally mode right now. It's going to take a large shift in order flow to pull this thing back up and to kind of switch my perspective on this market. So with that being said, right, tread lightly. It's Monday. We don't want to overdo this, and we'll do this again tomorrow and the remainder of the week. Enjoy the day, the week, and remember, TRADEPRO Academy, what we're doing this week is we've got 2 new lessons of the second part of the futures course that will be recorded for our members. And if you want to check that out and see more about that, hit up community.tradeproacademy.com so you'll get all the important newsletters. And we also have a psychology portion that's going to be multiple lessons to help you with those past hurdles and get to that next stage, right? Remember that video that I posted this weekend got a lot of feedback, right? A lot of people enjoyed it because of the truthful nature. So it's going to be a lot of that throughout the psychology course that we're going to be breaking down in part 2 of the futures course. So if you want more information, check out tradeproacademy.com, check out community.tradeproacademy.com. Happy trading. Let's open up our futures room and see what we got cooking on the session today. Don't be crazy. Don't just fade everything that you see. Read the order flow. If we start opening up and just market sell all over, you know the bears are still holding this thing down. So keep in mind those levels, right? Right now we have the mid-30s, mid-40s, and then the 60s, mid-60s. Realistically, we're still in a bearish structural movement. Anything back above that mid-60, I start swaying a little, but it's going to take a lot